In this video, I wanted to address some of the IRS penalties that are attached to late filed IRS forms or just completely omitting the forms altogether when you file your tax return. And specifically, I wanted to hone in on some of the international information return disclosures. So these are some forms that must be required if you own foreign financial assets like foreign corporate interests, foreign partnership interests, PFICs, and things like this. And so we'll go on down the list later. But the idea is the IRS really is ramping up its enforcement on U.S. taxpayers disclosing their foreign holdings. And one way they're encouraging this is attaching massive penalties for individuals and U.S. businesses that fail to disclose these forms. So let's start at the top here and work our way down. We have at the top, generally, all U.S. persons are required to submit some type of tax return each year, right? This is obvious. So individuals need to file a Form 1040. If you're a C Corp, you're filing an 1120. U.S. partnerships file a Form 1065, and you have your S Corps filing 1120S. Now, of course, there's other ones on here, right? You have, let's say, U.S. Trust files a 1041. U.S. Charities file 990s, private foundations file 990 PFs, the list goes on. But these are some of the most common types of structures and filings where you might have these additional international disclosure forms. So within each of these filings, the U.S. person may be required, very often is required, to include additional IRS forms and schedules, including these foreign financial asset disclosures. So let's look at an example here. We have Jack and Jill. They form a Delaware LLC. They each own 50% of the units. By default, the Delaware LLC is a partnership in that context, so it's got to file a Form 1065 each year. After the entity was formed, the Delaware LLC creates a subsidiary in the UK, so a UK limited company, and it owns 100% of the corporate stock. So we have Delaware LLC as a partnership, owns 100% of the shares in a foreign corporation. Because the UK limited company is a controlled foreign corporation, or CFC, for federal tax purposes, the Delaware LLC must include a Form 5471 with its annual 1065 filing. And then in the year of formation, it has to include an IRS Form 926 to report the contribution of cash in exchange for the stock. Now, the Form 5471 is required even if the CFC has no activity or it's losing money. It doesn't have to be profitable. And I really want to hammer this one home, because I see this mistake made so many times where CPAs or tax preparers will look at it and say, well, the foreign company isn't making any money, right? So there's no income to include. Why would the IRS care about it? We don't have to do anything. That is not the standard. That is completely the wrong idea to get from these types of disclosures. A lot of these disclosures are put in place with no de minimis thresholds. It doesn't matter what's going on. If you own the interest in the entity, or the stock, or the partnership, whatever it might be, whether it's losing money or not, you still have to include these forms to disclose the interest. The IRS does not care that you might be losing money year after year in the company. They still want to see the disclosure on the 5471. So what are some of the late filing penalties if you fail to include these? Well, they're quite severe, right? So a 5471 for a CFC is a $10,000 penalty per form. Form 5472, that's filed for U.S. corporations or foreign-owned U.S. disregarded entities. That penalty is $25,000 per form. So, I mean, think about this. Even if you have a business that's not making any money, not generating any revenue or expenses, you still have the filing obligation. Failure to file these forms, you're looking at massive penalties for just missing it. So very, very important that these get filed, because you do not want to be cutting a check to the IRS for these kind of amounts. The IRS Form 8621, this is for PFIC. So PFIC is a passive foreign investment company. That's $10,000 per form if you miss that thing. And then we have the 8938 for foreign financial assets. That's, again, $10,000 penalty per form. And then on top of these, a lot of these have provisions where if you've been notified of the deficiency, so you owe the 10 grand, and then if after 90 days you fail to file these forms to remedy the issue, you're looking at an additional $10,000 penalty per 30 days that you're delinquent. So these penalties can get extremely high very quickly if you're not compliant. Now, for the statute of limitations, this is also very, very important to note. A lot of people think that, okay, once I file a tax return, I've got 3 years before the IRS can challenge it, and then I'm home free. 100% not the standard. Statute of limitations on a tax return doesn't start unless you filed a complete and accurate return. Now, the IRS is going to argue, well, if you missed one of these forms that should have been filed with your 1040 or your 1120 or 1065, the statute of limitations never started. The clock never started ticking. So if you had a return that you filed this year in 2021, you're thinking, okay, 3 years and I'll be good to go. No. If you missed including one of these forms, the statute of limitations never started, which means the period for examination is open forever. Okay? Very, very important to get these filed to make sure that your SOL, your statute of limitations, actually, the clock starts running. So what happens if you fail to file one of these? What are your options? Well, you've got several options to work with here. The IRS provides a couple. Basically, you have to amend the return and report your delinquent international form disclosures, right? So we're amending the returns to include, let's say, the 5471 or the 8621, whatever it was we missed. But you file pursuant to a couple of procedures. So two of the most popular are these at the top of the list. You have your streamlined foreign offshore procedures and your streamlined domestic offshore procedures. So the foreign one is available to U.S. individuals that were living and working outside the U.S. when they failed to include these forms. So, for example, if you're a U.S. person and you're living and working in, let's say, France, and while in France, you filed your 1040, but you failed to disclose that you opened a French corporation. So you should have done a 5471. You can file amended returns under the Foreign Offshore Procedures Program, include the 5471, anything else you need to disclose, and as long as you meet the requirements of these foreign offshore procedures, you shouldn't be subject to any kind of penalties. If you owe tax, you have to pay the taxes, but you shouldn't be penalized, this $10,000 hit for failing to do that. The Domestic Offshore Procedures Program is available to U.S. individuals that failed to file these forms, but they were living and working in the U.S., so they weren't U.S. expats living abroad. Now, in this program, there is a penalty, but it's capped at a certain amount, so it's not as severe, right? So it's still a good procedure to go with if you failed to get these kind of forms filed. And then the IRS has their voluntary disclosure program. The OVDP program was discontinued just recently, but the voluntary disclosure program still exists. Effectively, you can still file amended returns. You pay quite a steep penalty, but the idea is they take jail time off the table. So you're not going to jail for failing to file the forms if you meet the requirements, but you're still going to be subject to some pretty heavy penalties if you go down that route. And then there's always this catch-all kind of reasonable cause defense. If you can establish reasonable cause for failure to file, a lot of times you can rely on, if you relied to your detriment on a tax preparer, right? So if you told a tax preparer that you owned foreign assets or foreign company and they said, oh, yeah, you don't have to do anything beyond this, a lot of times that can help you get out of paying delinquency and accuracy related penalties. But again, these are some of the options. There are a few others. But if you find you're in a position where you have failed to file these forms, I 100% recommend you do not do this yourself. Hire a competent tax attorney or CPA that assists clients on a regular basis with these kind of issues, because if something is done wrong and the program that you submitted under isn't accepted, the penalties are massive, right? They are massive, and they're almost to the point where you can't recover from them. So be very, very careful when you're filing your tax return every year, make sure these are filed. If now you're watching this video and you found you haven't done it, you should explore one of these options. And again, I would reiterate hiring a competent tax lawyer to help you pick which one, prepare the filings, and then proceed appropriately. So I hope that was helpful for everybody. That's everything I wanted to cover in this slide and on this video. If you have any questions, please leave me a comment below. Happy to answer. And of course, like always, I look forward to seeing you on the next video. Thank you.